August 2023. China buys oil from Saudi Arabia. Pays $48 billion. But not in dollars. In yuan. Saudi Arabia converts the yuan to gold. Physical gold. 600 tons. Shipped to vaults in Riyadh. For 50 years, this was impossible. Oil only traded in dollars. Now BRICS controls 42% of global oil, and they're settling in gold instead. The petrodollar system just broke. Most people missed it. Welcome to Financial Rewind. I'm here to show you the power shifts happening in plain sight. And today, we're exposing the BRICS gold-backed oil system, the quiet agreement between China, Russia, Saudi Arabia, and Iran, to trade energy outside the dollar using gold as settlement, building payment rails Washington cannot control, and why this represents the biggest threat to American financial dominance since 1974. This is how empires shift, not with declarations, with commodity trades and central bank vaults. Let's start with what BRICS actually means, because this matters. BRICS is 5 countries: Brazil, Russia, India, China, South Africa. Together they represent 42% of the world's population, 25% of global GDP. Started in 2009 as a talking shop. Annual summits, vague cooperation statements. Nothing concrete. The West dismissed it. They have nothing in common, analysts said. Different systems, different interests. It'll never work. But then 2022 happened. The United States froze Russia's dollar reserves. $300 billion. Overnight. No warning. No legal process. Just confiscation. Russia had played by the rules. Accumulated dollars. Bought U.S. treasuries. Participated in the global system. And America took it all. Every country with dollar reserves watched. And thought the same thing. That could be us. One policy disagreement with Washington. And our reserves disappear. The dollar isn't neutral money. It's a control mechanism. Suddenly, BRICS wasn't just a summit. It was a survival strategy. Here's what happened next. Saudi Arabia applies to join BRICS, the linchpin of the entire petrodollar system. UAE applies. Iran applies. Egypt applies. By January 2024, BRICS expands from 5 members to 11. Now they represent 46% of global population, 36% of global GDP. But here's what matters most. These new members produce oil. Saudi Arabia produces 10 million barrels per day. UAE produces 3 million barrels per day. Iran produces 3 million barrels per day. Russia produces 10 million barrels per day. Combined, BRICS now controls 42% of global oil production, more than OPEC, more than the United States, and they're building infrastructure to trade it without dollars. The system has 3 parts. Let me show you each one. Part 1, the mBridge payment platform. This is blockchain-based infrastructure for cross-border settlements, built by China, Russia, UAE, Thailand, and Hong Kong. Backed by the Bank for International Settlements, it settles transactions in local currencies. Yuan, rubles, dirhams, baht. No dollars needed. No SWIFT network needed. Transactions clear in seconds instead of days. Costs are 90% lower than traditional banking. And here's the crucial feature. The United States cannot monitor it, cannot sanction participants, cannot freeze accounts. mBridge launched in pilot phase in 2023. By 2024, it processed $12 billion in transactions. This isn't experimental technology. This is live central bank infrastructure, built specifically to bypass the dollar system. And it works. Part 2. Gold-backed settlement. China operates the Shanghai International Energy Exchange, launched in 2018. It trades oil futures in yuan. But here's the innovation that changes everything. Yuan oil contracts convert to physical gold, real gold bars, delivered from vaults in Shanghai. This solves the fundamental problem with non-dollar oil trade. What do you do with the currency after the sale? If Saudi Arabia sells oil to China for yuan, it accumulates yuan. But Saudi Arabia doesn't want yuan exposure long-term. The solution is elegant. Convert yuan to gold immediately. Take physical delivery. Store it in your own vaults. Now you're not holding currency risk. You're holding the universal reserve asset, gold. Russia started using this in 2022. Sold oil to China for yuan. Converted to gold on Shanghai Exchange. Took delivery. By 2023, Russia's gold reserves increased 600 tons, all purchased with yuan from oil sales. The mechanism works, and it's scaling fast. Part 3. The bilateral agreements. This happens country by country. Quietly, no grand announcements. Just technical agreements that rewrite 50 years of oil commerce. March 2023. China and Brazil agree to trade in local currencies. No dollars for bilateral commerce. April 2023. Russia and India settle oil in rupees and rubles. India now buys 40% of its oil from Russia. None of it priced in dollars. June 2023. China and Saudi Arabia sign a currency swap. 50 billion yuan capacity. Enables direct yuan real transactions. August 2023. Saudi Arabia officially accepts yuan for Chinese oil purchases. December 2023. UAE reports 75% of China trade now settles in yuan. Each agreement alone seems small, but together they form a network, a web of bilateral currency arrangements, non-dollar trade routes, and the network grows every month. Let me show you the gold component specifically, because this anchors the entire system. China has been accumulating gold for 15 years. Official reserves show 2,000 tons, but Western analysts estimate 20,000 tons actual holdings. Why the difference? China buys gold through state banks that don't report to the central bank. China mines gold domestically and exports none of it. China imports gold through Hong Kong without full disclosure. For 15 years, China has quietly accumulated. Russia followed the same strategy. Official gold reserves are 2,300 tons. After the U.S. froze dollar reserves, Russia accelerated purchases. Now 25% of Russia's reserves are gold, up from 5% in 2005. India holds 800 tons officially, but Indian households privately hold 25,000 tons, more than any country on earth. Saudi Arabia doesn't disclose gold reserves, but purchases have increased. The pattern is unmistakable. BRICS members are converting dollar reserves into gold, preparing for a system where gold backs settlement, not dollars. Now let me show you why this threatens dollar dominance. The petrodollar system worked since 1974 for one reason. Oil producers had no choice. They needed dollars to trade globally. So they accumulated dollars and reinvested those dollars in U.S. treasuries. This created automatic demand for dollars, for U.S. debt. It allowed America to run massive trade deficits without consequences. Import more than we export every year. Pay with dollars we print. And watch those dollars flow back to finance our deficit. It's a closed loop. But the loop is breaking. Watch what happens now. Saudi Arabia sells oil to China for yuan, converts yuan to gold, takes physical delivery. The dollars never get created. Saudi Arabia doesn't accumulate dollar reserves, doesn't buy U.S. treasuries. The automatic demand disappears. Now multiply this across all BRICS producers, 16 million barrels per day. At $80 per barrel, that's $1.3 billion daily, $475 billion annually. If half of that trades outside dollars, that's $240 billion less in dollar demand each year. $240 billion that doesn't flow into treasuries. That's not theoretical. That's measurable. And it's happening right now. Here's the data showing the shift. Dollar share of global reserves, 1,999 was 71%. 2010 dropped to 62%. 2020 was 59%. 2024 is 54%. Declining steadily. But in 2023, the decline accelerated. Yuan share of global payments. 2015 was 2%. 2020 was 3%. 2024 is 7%. Growing. Fast. And here's the critical metric. Oil trades settled outside dollars. 2020 was less than 5%. 2023 jumped to 15%. 2024 reached 23%. That's a 400% increase in 4 years. The trajectory is clear and accelerating. Let me show you a concrete example. India and Russia oil trade. Before 2022, India bought Middle East oil, paid in dollars. Standard practice. Then sanctions hit Russia. Russian oil became cheaper. India started buying. By 2023, India imports 40% of oil from Russia, 1.6 million barrels daily. Zero settles in dollars. Russia invoices in rubles. India pays in rupees. Currency exchange happens through mechanisms outside SWIFT. Settlement occurs through Russian banks operating in India. The entire loop bypasses the dollar system. This represents $900 million per day, $328 billion annually, completely de-dollarized. And it functions perfectly. Russia gets paid. India gets oil. Nobody needs dollars. The system works. Now watch how this affects sanctioned countries. Iran, locked out of dollar system since 1979. Couldn't sell oil for dollars, couldn't access SWIFT, couldn't trade with most of the world. This should have crippled Iran's economy. For decades it did. But now Iran has alternatives. Sells oil to China for yuan, converts yuan to gold. uses M-Bridge for settlement, bypasses sanctions completely. Iran's oil exports in 2020 were 500,000 barrels daily. By 2024, back up to 1.5 million barrels daily. Triple the volume. Despite maximum pressure sanctions, because China built payment infrastructure sanctions can't touch. Iran isn't alone. Venezuela uses the same routes. Cuba explores it. Any country under U.S. sanctions now has an escape path. The sanctions tool loses effectiveness. Let's focus on Saudi Arabia specifically. This is the critical pivot. Saudi Arabia has been America's anchor ally for 50 years. The original deal was simple. Saudi Arabia prices all oil in dollars exclusively, invests oil revenues in U.S. treasuries. In exchange, America provides security guarantees, provides advanced weapons, protects the House of Saud. This deal created the Petrodollar system in 1974. But the relationship is shifting. Saudi Arabia applied to join BRICS in 2023, started accepting yuan for oil in 2023, signed defense cooperation with China, normalized relations with Iran through Chinese mediation, not American. Crown Prince Mohammed bin Salman sees the future clearly. China is Saudi Arabia's largest customer, buys 1.7 million barrels daily, 20% of Saudi production, and China wants to pay in yuan. Saudi Arabia faces a choice. Refuse yuan and lose the customer, or accept yuan and join the new system. The economics are obvious. Saudi Arabia is hedging, maintaining the U.S. relationship, but building the China relationship, preparing for a world where the dollar isn't dominant anymore, where BRICS offers a viable alternative. Let me show you how this works in practice. China and Saudi Arabia oil trade in 2023. China buys 600 million barrels annually from Saudi Arabia. At $80 per barrel, that's $48 billion. 20% now settles in yuan. $9.6 billion. Here's the flow. Saudi Arabia receives yuan payment, converts yuan to gold on Shanghai Exchange, takes physical delivery of gold bars, ships gold to vaults in Riyadh. The gold accumulates in Saudi vaults. Saudi dollar reserves decline. U.S. Treasury holdings decline. The closed loop breaks. And this is one country, one bilateral relationship. Multiply across all BRICS members, all the bilateral agreements, all the yuan for oil swaps. The system is rewiring, trade by trade. Now let's talk about U.S. response options and why they're limited. Option 1. Sanction countries trading outside the dollar. But sanction Saudi Arabia, UAE, India? These aren't North Korea. These are major economies. Sanctioning them accelerates their exit, and they have alternatives now. Option 2. Offer better terms for dollar use. Make dollars more attractive. But how exactly? Lower rates to reduce costs? That creates inflation. Raise rates to attract investment? That strengthens the dollar and kills U.S. exports. There's no easy solution. Option 3. Build better payment infrastructure. Compete with M-Bridge on speed and cost. But U.S. financial system runs on correspondent banking. Slow. Expensive. Built for a world where dollars were the only option. Rebuilding takes decades. BRICS has first mover advantage. Option 4. Diplomatic pressure. Convince allies to reject BRICS. Convince producers to stay with dollars. But what's the argument? Keep using dollars so we can freeze your reserves if we disagree? That's not persuasive. That's why they're leaving. The U.S. has less leverage than assumed. Here's what the data suggests happens next. Not prediction. Pattern recognition based on current trajectories. Phase 1. 20 to 30% of global oil trade moves outside dollars by 2027. This is already underway. Current path continues. Phase 2. Other commodities follow oil's lead. Chilean copper, priced in yuan. Russian wheat, priced in rubles. Once oil breaks the dam, everything flows through. Phase 3. Dollar share of global reserves drops from 54% to 40% by 2030. Not collapse. Managed decline. But significant erosion. Phase 4. U.S. can no longer run trillion-dollar deficits without real consequences. Interest rates stay higher. Borrowing becomes expensive. Choices become necessary. Cut spending or raise taxes. Neither is politically popular, but economically unavoidable. Phase 5. A multipolar currency system emerges. Not dollar dominance. Not yuan dominance. A mixed system. Dollars for some trades. Yuan for others. Euros for some. Gold settling differences between them. This is the destination. Not a crash. An evolution from dollar hegemony to currency plurality. Let me address the counter-argument, because it matters. Dollar skeptics have been wrong before. 1,970 seconds. People said the dollar was finished after Nixon ended gold convertibility. Dollar got stronger. 1,980 seconds. People said Japan's yen would replace the dollar. Didn't happen. 2000s. People said the euro would become the reserve currency. It didn't. The dollar survived every challenge. Why? Because alternatives are worse. The yuan isn't freely convertible. China maintains capital controls. Legal system lacks transparency. Property rights aren't secure. Nobody wants long-term yuan exposure. The euro is currency without fiscal unity. 19 countries. 19 budgets. 1 monetary policy. Inherently unstable. Gold can't function as modern currency. Can't expand supply with economic growth. Can't contract during recessions. Can't be lent into existence. So the dollar wins by default. Not because it's perfect, because everything else is worse. This argument has been right for 50 years. But here's what's different now. BRICS isn't trying to replace the dollar. They're trying to bypass it. They don't need yuan to become the global reserve currency. They just need yuan to settle bilateral trades. They don't need gold to become money. They just need gold to anchor settlements between currencies. They're not building a new hegemonic system. They're building a parallel system, one that coexists with dollars, but doesn't depend on them. That's achievable. And it's happening. Let me show you the human dimension, because this isn't abstract. For 50 years, the U.S. had power to freeze any country's assets, cut them from global finance, end their ability to trade. That power kept smaller countries aligned with Washington, doing what America wanted, even against their own interests, because the alternative was financial isolation. Now there's an alternative. Countries can trade with China, Russia, India, Saudi Arabia, UAE, 46% of global population, 36% of world GDP, using payment systems Washington cannot control. That's freedom from one country's unilateral decisions, from one currency's dominance, from one power center. Whether you view this as positive or negative depends on perspective, but it's happening, and it's irreversible. Here are 5 signals to watch. These tell you the pace of change. Signal 1. Saudi Arabia's U.S. Treasury holdings, currently around $120 billion. If it drops below $100 billion, they're actively diversifying out. U.S. Treasury publishes quarterly data. Signal 2. Percentage of global oil traded outside dollars. Currently 23%. If it hits 30% by end of 2025, acceleration is confirmed. Watch shipping and settlement reports. Signal 3. BRICS membership expansions. If major producers like Kuwait, Iraq, or Kazakhstan join, it's a tipping point. BRICS summits happen annually. Pay attention. Signal 4. M-Bridge transaction volume. Currently $12 billion processed. If it reaches $100 billion by 2026, it's becoming systemic infrastructure. BIS publishes periodic updates. Signal 5. Gold purchases by BRICS central banks. If combined purchases exceed 500 tons annually, they're preparing gold-backed settlement at scale. Check monthly reserve data. All 5 signals flashing together? Dollar dominance is ending faster than consensus expects. Let me be clear about what this is, and what it isn't. This is not the death of the dollar. The dollar remains important. U.S. economy is still largest. Most liquid, most innovative. The dollar will still be widely used, just not exclusively. This is the end of dollar hegemony. The end of one currency controlling global commerce. The end of unilateral U.S. power to sanction any country. That era is closing. The new era is multipolar. Multiple currencies. Multiple payment systems. Multiple power centers. Some see this as American decline. Some see this as overdue rebalancing. I see it as inevitable. In 1944, at Bretton Woods, the dollar became global reserve currency. The U.S. held most of the world's gold, most of the productive capacity, most of the military power. It was the logical choice. 80 years later, the world changed. China produces more than the U.S. BRICS combined outproduces the G7. Gold is distributed across many countries. Military power is more balanced. The conditions that created dollar dominance no longer exist. Systems built for one era don't last forever. They evolve, or they break. The dollar system is evolving into something more distributed, where power is shared, where alternatives exist, where no single country dominates. History doesn't repeat. It reveals, and right now it's revealing, the architecture of power is shifting. Not through war, not through revolution, through commodity trades settled in yuan, through gold shipped to Riyadh, through blockchain payments clearing in milliseconds, through quiet deals between countries that decided they'd rather not ask Washington's permission to trade with each other. Welcome to the BRICS system, built in parallel to the dollar system, using gold to anchor what dollars used to guarantee. Not asking for permission, quietly rewiring 50 years of dollar power, one oil trade at a time.